I think there's a sigh of relief. I mean, thank God it's over. All the yelling, screaming, and ads and requests for money, well, at least we're going to have a pause, maybe for 2 months until 2020 starts.
Yeah. Let's talk a little bit about, we talked about how the election may affect the Fed. In theory, it shouldn't affect it very much at all, but maybe you see a way it does that I don't. The economy and policy that might affect the economy and more. So take them one at a time. And trade was the third. Take them one at a time. The Fed, the economy, and trade.
Okay. Well, we'll start with elections and the Fed. The Fed doesn't pay any attention to elections, and they won't this time. I think that I'm on the side of the minority with regard to December. We have had a tightening of financial conditions. There's no question about it during the intermeeting period. I think the Fed would be wise even to recognize that in its statement. In addition, the third quarter PCE deflator came in at 1.6. It's fallen for 3 quarters in a row. So there's hardly an urgent need to raise rates. And the Fed's walking across a minefield here, especially with that $600 billion that you mentioned. You know, we don't know when some mine is going to go off. It's better for the Fed to go a little bit slower.
All right. And then let's talk about trade and how a Democrat-controlled House might affect such things as the USMCA and other trade deals where the Congress may get involved.
Well, we need to remember that the Democrats are the protectionist party in America. And so I know there's a lot of talk that it might, cause Trump to be more willing to make deals. I don't think it's going to affect Trump one way or the other. I do think it's going to make more difficult to get deals through. And I think you'll see actually probably a little more hawkish trade stance with the Democrats in the House.
Larry, you'd mentioned that you're in the minority when it comes to thinking the Fed should hike interest rates in December. What happens if the Fed hikes interest rates in December? What happens if the Fed continues with its already telegraphed path?
Well, we'll see. Yeah, the big problem here, Melissa, is risk. We've now had 3 booms and 2 busts, largely driven by monetary policy in the last quarter century. Now, I really think it's important just for the Fed's institutional survival for them not to have this one end in a bust, too. And so I don't know whether it's the next quarter point or the quarter point after that or the quarter point after that, but it is going to happen. Remember, the Fed deliberately ran an easy monetary policy to push asset prices up. Risk expanded all around the world. We're now taking that away. Things should go into reverse. So I don't know when it's going to happen, but I think it's important to do it cautiously rather than speedily in order to minimize the harm. What
do you mean by institutional survival of the Fed if the next rate hike, if the rate hike after that results in a bust?
Well, what would you think of an institution that was supposed to moderate business cycles, but in 25 years ran 3 booms and 3 busts, one of them very severe? It would be very hard. I mean, I'm as pro-Fed as anyone can be, but how am I going to go out there with that kind of record and say, gee, central banking is really doing a great job? No, they would have actually destabilized the business cycle if they end up with 3 strikes and you're out situation.